The pound continues to shine as the star performer in an FX market that is otherwise disinterested in doing much at all. The latest wave of demand back through 130 in the cable rate has been driven on chatter that it was highly likely an amendment would be back to prevent a no-deal Brexit. All of this further reduces the hard Brexit risk and leaves the pound in a much better position to make up some ground after taking a beating since April of 2018. UK CBI trends data didn't do anything to deter the pound, even with the survey's quarterly optimism balance component sliding to its lowest level since July 2016, and the quarterly export optimism component sinking to its worst reading since January of 2009. There wasn't much else going on out there, though risk markets were trying to work their way back up after U.S. economic advisor Kudlow had attempted to calm investor nerves, dismissing reports that trade talks with China had been called off. The BOJ decision at the start of the day came in as expected, with the central bank also cutting its inflation outlook and conceding downside risks to the economy, and inflation had grown. On the commodity currency front, the Canadian dollar got some attention after taking in a weaker than expected Canada retail sales print. Looking ahead, Thursday events revolve around Aussie employment data early on, followed up by the always anticipated European Central Bank decision later in the day. We have seen some selling of the euro ahead of the event risk in anticipation of a more dovish-leaning Draghi who upgrades his worry about downside risks associated with the eurozone and global economies. Still, longer-term players are more focused on the soft dollar fundamentals, which they believe will more than offset calls for a lower euro on ECB dovishness. That's all for now.